Hello there, Hector Davil here. In this particular video, we're going to talk about how to read the news spike. On a previous video, we've just seen how to trade the spike should it come in line with our technical analysis, alright? Meaning, should it come in line with our standard technical analysis chart-based trading system. Right? Well, in this particular video, we are actually going to be reviewing the opposite scenario. What happens if the spike or if price up on the news spikes in the opposite direction of our technicals? Okay, so let's get going. Okay, let's refresh our minds on what we've seen so far. Okay, we saw how there are three possible outcomes from a news announcement or upon a news announcement. Or more specifically, there are three possible ways in which a news announcement may affect our Forex chart. For example, or first of all, we can have price spiking in the direction of the technicals. For example, if we had a trending scenario, all right, with our typical zigzagging formation and price came back down on a final pullback, and at that precise moment we had news announcements being released in the market or scheduled in the market, you know what to do. You are to bracket the news announcements in the direction of the technicals. So should price spike to the upside, not only you have a trade that's going to be fueled by that momentum delivered by the news, but also you are going to have a trade, a position that's going to be backed up by a valid scenario from a technical analysis point of view. All right. Second possible outcome: the news may come out as expected, and therefore we'll see no deviation, and in such case, chances are we'll see no spike at all either. All right. The charts, the Forex charts, will remain unaffected, and well, you know what to do in this case. We just trade our standard technical analysis just as usual, like if no news had been released at all. Okay? And finally, third possible outcome: price spiking against the technicals. This is obviously the ugliest of all situations. Okay, you obviously would wish for the news to spare your trade in the direction of the technicals in heavy momentum, or at the very minimum, at least you would like to see the news not to meddle with your trades at all. All right, no spike at all, so you can trade your trading system without any interruption whatsoever. All right, that would be obviously the two ideal situations. However, I am afraid that the markets not always play along. All right, they are not always that nice, and on occasion you will see price spiking against the technicals. This is what we are going to be focusing on today. On this particular video. All right, we already see on a previous video how should price spike against the technicals. The first thing we need to do is to simply cancel any pending order we may have at that precise moment. Right? Well, yes, that's true, that's correct, but there is a little bit more than that to it. Okay, there's just a little bit more than that to it, and we can indeed get some more information out of the spike, even if it again spikes or even if it takes off against the technicals. All right, that's what we are going to be focusing on today, and well, I think it's going to be rather interesting, so let's get going. All right, so should we get this third possible outcome, how can we possibly benefit from that? I mean, in theory, it should not be positive at all, right? But that's not quite true. We can extract still some benefit out of that potential outcome. All right, and here is how: by having the technicals and the news in disagreement, or rather, by confronting the technicals versus the news momentum, we are going to be able to gauge an idea on how strong those technicals actually are. All right, I'll repeat that. We are going to be able to gauge an idea of how strong our technical analysis scenario actually is, and whether whether it is indeed strong enough to continue searching for trading opportunities in the direction of those technicals. Is your head spinning yet? Did I manage to get you all confused? Now don't you worry, I'm gonna explain exactly what I mean here. Just give me a second. Let's imagine we are facing a typical trending scenario. Price has been zigzagging up for a few days. Let's assume this is an intra-week trend, and therefore price has been zigzagging up for, I don't know, let's say 3 days. All right. Well, let's imagine at that precise moment we have a news announcement being released into the market, and we are obviously gonna follow that particular news announcement to see how it affects or how it impacts our forex chart, and obviously how it affects this trend. So the news are out, and dear oh dear, the spike actually takes off against the technicals. Well, our worst nightmares have become true. People are running for the hills. What can we do in this type of a scenario? Well, as I was mentioning before, not everything is lost, because when we confront the technicals and the spike, we'll be able to determine how valid the technicals were to begin with. We are going to be monitoring price action real closely up on the news to confirm whether the spike is able to bring the entire trend to its knees. Is it able to breach through the trend line? All right, this trend line there. Can it breach through the trend line? Moreover, can the spike have price scoring lower lows? I mean, at the end of the day, a trend by definition is nothing but a string of, following higher swing highs and higher swing lows. All right, that's the definition of an uptrend. If the spike can drive price down enough to make a lower swing low, all right, a lower swing low meaning price ticking down here, okay, well, that's the end by definition of an uptrend. So what we are basically going to determine here is whether the technicals, meaning the trend, is strong enough to survive a negative news spike. If the news spike is in fact able to bring the entire trend to an end, it means that the trend didn't have enough buying pressure. It was not backed up. It was not carried by enough buyers willing to bet their money in order to continue pushing price in the direction of the trend. And therefore, that means that this trend was a weak trend to begin with. In fact, and by definition, if the news spike can indeed breach through the trend, it means that this trend was developed by thin market volume. I'm gonna repeat that because this is the key concept here. If the news spike can take the entire trend to an end, it means that this market was not being traded in heavy market volume. There were not enough trading orders in this market to hold the spike, the negative temporary spike. If any random negative price spike delivered by any random news, which at the end of the day, we have news coming out in the market every single day, right? I mean, this is not something that happens once in a blue moon. We have news spikes almost every second day. Well, if any of those random spikes can bring the entire trend to an end, it means that this trend was developing in thin market volume. Okay, it's just so important you guys understand this. This was not a solid trend to begin with, and therefore this negative news spike has actually done us a favor, because it's pinpoint a weak trend, and therefore it's probably kept us away from a rather troublesome trade. Imagine we didn't have any news announcement to begin with. All right, we were searching for trades within this trend. Chances are that we would be searching for trades in the direction of the trend. All right, and whenever we would get our trading opportunity, we would obviously jump into this market again, most likely in the direction of the trend. But since this trend is developing or is based on thin market volume, chances are the trend, and therefore any trade we may have taken within that trend is going to collapse sooner or later. At the end of the day, the market cannot sustain a trend unless there is enough muscle, there is enough gas fueling the trend or fueling price behind the scenes. And as we've already seen, thanks to the news announcement, thanks to that negative spike, now we know that that trend was running low on gas. And therefore, do you really want to get involved into that trend? No, you don't. Chances are that the news spike, has kept you away from a very troublesome trade. Okay, now let's turn that all around. Let's imagine price does indeed bring price down. Okay, we do get that negative price spike, and that spike brings price all the way down, maybe to the whereabouts of that trend line, maybe to the whereabouts of Fibonacci retracement, the area where buyers should be appearing into this market, buying into this trend, and therefore maybe willing to ride price for a whole new swing in the direction of the trend. Alright, so price comes all the way down here, and at this level, instead of seeing a breakout, what we see is price stalling sideways, maybe the news momentum dying out, and from there price begins to crawl up once again. What type of conclusion can we get out of this? Well, obviously, first conclusion, the trend seems to be surviving the negative news spike, right? And second conclusion, there is enough buying pressure to bring this downward momentum to an end. Now it's not the downward momentum the one bringing the trend to an end. Now it's the trend the one bringing the downward momentum to an end. All right, and therefore, as I was mentioning before, as a conclusion, we must believe that this trend is developing in high market volume, which is precisely what a healthy trend should do. So, course of action here, and now I'm trying to be a little bit more specific. What should you do? Should you see price spiking down against the technicals, but then the technicals surviving the news momentum? Well, obviously what you should do is to follow that setup, to follow price action real closely, and to be fully ready to take the first signal your system gives you, again in the direction of the technicals, of course, because the technicals have proven, at least at that precise moment, to be strong enough to survive the news. All right, so any trading signal, any upcoming trading signal your system may give you, that's a trading signal you really want to take here. All right, it's going to be a high probability trading signal because it's going to be backed up by strong market volume. Okay, the majority of the trading volume in the market is going to be pointing in your direction, as we've already proven, as we've already determined by the news spike. Okay, that's how reading the news spike can help you once again gauging a rather solid idea of whether the technicals on that particular market scenario are strong or not. Let me now give you another case example just to make sure, everything is fully understood. All right. Let's imagine we look into our chart and we can define one key level as per the last few days, one key support and resistance level as per the last few days. This time around we are seeing actually one of my favorite trading setups, a flat bottom triangle or a flat top triangle, it doesn't matter, which is basically a congestion area where one of the boundaries is a flat line whereas the other one is a leaning line or a trend line. All right. In this particular scenario, we are looking into a flat bottom triangle. A flat top triangle would look something like this. Okay, with one flat line where price tops out at, and then one diagonal line linking the consecutive price lows building pressure upon this flat line. Eventually that line cannot hold price back anymore, and bang, we see the breakout. That's one of my favorite trading setups, by the way. Well, here we are seeing a flat bottom triangle, pretty much the same thing. As you can see, price scoring lower swing lows, building pressure upon this flat line or horizontal line. Eventually that line cannot defend that level anymore, and price simply breaches through. Alright, so let's imagine we've seen this nice breakout in the direction of that of that market pressure, and at that point we have a news announcement hitting the market. Well, if price spikes to the downside, you know, there is nothing to analyze here. Price keeps on further pressing in the direction of the breakout. I'd like to focus on the other possible outcome: price spiking against the technicals. Obviously, the key level to follow here, just as we saw in the previous case example, that we would be following more or less this area, the trend line area. Well, this time around we would obviously be focusing on that key level. If price spikes up and it, you know, drives, or it manages to breach back above this level, and therefore within the congestion area, and moreover it remains above that level, well, it means that this level was not that strong to begin with. Okay. In the other hand, if price spikes up but this level contains the news momentum, and from here we see price you know, turning around in the direction of that original breakout, in the direction of that market pressure, basically in the direction of the technicals, right? Well, any short opportunity we may find here is going to be a solid, a high probability trade, because chances are price is going to take off on a whole new swing to the downside. On occasion, we may see price temporarily breaching through this level. Okay, at the end of the day, this is momentum trading. You know, whenever we are seeing high momentum in the market, we cannot expect the key horizontal levels to hold price right to the pip. Okay, that would be asking for too much. However, we may see price indeed breaking through, just to see it immediately after, you know, coming back down below that level. This is still considered, you know, as a valid support and resistance point, as long as price does not remain above that level. As long as price does immediately after turn around, this is still considered as a valid support level of you know, a valid level of support and resistance, and therefore any short opportunity our system may give us around there is going to be a fantastic opportunity to ride price for a whole new swing, again always in the direction of the technicals. And why is that? Well, once again, because the technicals have outpowered the news momentum, and therefore the technicals are pretty strong in this particular market scenario. At that particular junction of the chart, the technicals are pretty strong. Therefore, any signal you may get based on those technicals is going to be itself and a strong signal. All right. Okay, let me now show you something really interesting. If you remember, yesterday I was recording in real time the non-farm payrolls news announcement, okay, the unemployment data for United States. You've probably watched that news announcement recorded live, because like I said, I was actually recording my screen in real time for a previous video. So like I say, you've probably watched that particular news announcement on another video here at this module. If you remember, the market analysts were expecting the American economy to lose 56,000 jobs, all right? Whereas in reality it only lost 36,000 jobs. So all in all, it was a better than expected news announcement for the American dollar, and therefore once we took a look into the sterling pound against the American dollar, we saw how the sterling pound had lost 50 pips within a few minutes. All right, well, once that temporary news spike momentum died out, something very interesting happened in the market. Unfortunately, by then I had obviously stopped recording the video, but nonetheless I'd like to go back into that particular news announcements because, like I say, it's something that actually fits rather nicely with what we've been talking throughout this particular video. Okay? Alright, let me pull out the chart for the sterling pound against the American dollar once again. Here it is. Let me zoom in a little bit now, just to have a clear picture. Alright, there we are. The news announcement where the candle where the news announcement happened is this one here. Alright, this long candle with that long wick there. I'm actually going to mark it with a vertical line, and I'm going to mark that vertical line in black, for example. Alright, actually going to make it a little bit thicker. Okay, just to identify it on our chart. This is the candle where we saw that down spike. In fact, now I am going to zoom into the 5 minutes time frame. And here it is. This is the down spike that I was talking about before. In fact, you may want to go back into that particular video. I think it was the video where I was talking about the deviation, all right, and explaining all about deviation, and where I included this, when I was recording this particular news announcement in real time. Anyway, the news announcement came out there. The outcome of the news was better than expected, and price dropped down like 50-55 pips in no time, in just few minutes. Correct? Right there. But now let me go back into the 1 hour time frame. Okay, this is now the 1 hour time frame once again. Please check where price came down to. Price dropped all the way down to retest these lows here, yesterday's low, or rather the previous day's low, and the low for that particular day as well, okay, for the current day. Basically, price came back down to retest the low as of the last few days. Okay, we had formed a double level of support. Price had found enough buyers, or the market had found enough buyers, enough buying pressure at that particular level to rebound up off that level twice already. So price came back down to retest that level once again, and check this out. Price found rejection once again. Found rejection for a third time. Sure, it breached down, but just for so long. As I was mentioning before, whenever we are trading momentum moves, we cannot expect the levels of support and resistance to hold right to the pip, because price action happens just too fast, for price to be accurate with the levels of support and resistance, right? But at any rate, please see how price came back down. It just peeped for maybe 5-10 pips below that particular level, and immediately after it came back up. What conclusion can we get from this particular event? Well, if the news spike is overwhelmed by one particular level of support and resistance, that means that that particular level of support and resistance is indeed a strong one, and therefore we will see, or we should see, that level holding, and therefore price either, in this case, since this is support and price is retesting that level from below, we are expected to see a bounce to the upside should that level again overwhelm or survive the news momentum. Since it did indeed survive this downward momentum, price rebounded off that level once again for a third time. All right, for a third time, price found rejection. Okay, there is still buying pressure of that level. There are still enough buying orders waiting to be executed at this level, and as a result, what are we to expect? Well, we are to expect a sharp move in the opposite direction, because there is plenty of buying pressure, plenty of buy orders waiting to be triggered at that particular level. And again, as a consequence, we are bound to see a sharp bounce in the opposite direction. Okay, very, very typical market event. the news spike price towards one particular direction, right? Price comes to retest one particular level of support and resistance. If that level is breached, more often than not, we should see, a continuation move in the direction of the breakout. If instead that level holds, such as in here, even if we get for just a couple of minutes a temporary breach, right, or for just few pips, at any rate, if the level does hold, chances are that you will see a sharp move in the opposite direction. Okay, that's exactly the lesson I wanted to teach you guys here. How to gauge the validity of one particular level of support and resistance, okay? How to gauge the validity of technicals if the technicals, or depending on whether the technicals survive or not the news momentum. Alright, and now let me give you the blueprint to read the spike, or rather the blueprint to read or to gauge the validity of a level of support and resistance by reading the news spike. Okay, by the way, you may want to write this down on a piece of paper. It's a very mechanic process, but at any rate, you may want to write it down so you can stick it next to your monitor. Okay, first of all, we are to draw the short-term levels of support and resistance on all those currency pairs involving or related to the currency the news announcement is scheduled for. For example, we've just seen on the previous case example the unemployment data coming from United States, correct? Well, then we will draw those short-term levels of support and resistance for any American dollar currency pair or currency cross, such as the euro against the American dollar, the sterling pound against the American dollar against the Swiss franc, the American dollar against the Japanese yen, etc., etc. All right. Obviously, if we are to read the spike, we will only read the spike on those currency pairs related to the directly related to the news announcements. Okay. Now, when I say short-term levels of support and resistance, I mean levels of support and resistance that you may find on your chart as per the last 2 or 3 days. In my opinion, the 1 hour time frame is the best chart to recognize those intra-week levels of support and resistance. Again, you don't need to scroll back more than 2-3 days in your charts. At the end of the day, news trading or any other technique related to intraday trading has a very short memory span. All right. Again, news trading and anything that's related or anything that falls in the realm of intraday trading has a very short memory span, and therefore anything that spans beyond what's happened in the last 2 or 3 days is way too far back in time to actually matter. All right. So again, use your 1 hour time frame and then draw or mark those levels of support and resistance from an intra-week point of view. Okay, anything that's happened within the last 2-3 days. Next up, we are to wait, obviously, for the news to come out. All right, and once the news are out, we will check the spike. Well, first of all, we will check the deviation on our economical calendar, and as a result, we will check whatever spike we may have gotten on all those currency pairs related to that currency the news announcement is scheduled for. Alright, obviously you want to see a decent deviation, or at least large enough to create a decent spike on the charts. Okay, at the end of the day, please mind that we are here reading the spike, so if we get no deviation, as a result we'll get no spike, and therefore there is nothing to read here. Alright, so hopefully once the news are out, we will see some reasonable spike on our charts. If we get no spike, well, you know what to do. Just keep on trading your standard trading system just as usual, like if no news announcement had been scheduled for that precise day. Now, assuming we do get a decent spike, we need to wait for the news momentum to die out, and this is important, guys. All right, you don't rush into things here. You need to wait for price to begin trading at a normal pace. You need the momentum to settle down. Now, usually that takes between 10 and 15 minutes. All right. And the reason as of why we need to wait for the momentum to completely settle down, for the dust to settle down, is in order to gauge a valid idea of how far the news spike drove price to. Okay, so please don't attempt to read the spike within the first 2, 3, 4 minutes upon the news, the news announcement releasing time. Let it settle. Let it settle. There is no rush. There is no rush here whatsoever. So let the momentum die out. Wait for price to slow down to normal pace, and then you'll be able to gauge or to have a global view of the news spike. Okay. So, once the momentum has died out, once price begins ticking at a standard pace, we are to compare the news spike with all those levels of support and resistance we had previously marked on our charts. Okay? And this is done on a chart by chart basis. Please remember that we were marking those levels of support and resistance on multiple currency pairs, on all those currency pairs related to the particular currency the news announcements was scheduled for, right? So we are gonna analyze the spike on all those different charts, and then we are gonna see whether the news spike came to retest any of those levels, okay, on any of those currency pairs. If price did indeed come to retest either or any of those levels of support and resistance on any of those currency pairs, we have only two possible outcomes. Either our technicals, our levels of support and resistance are strong enough to hold back, to fight back the spike, and therefore we should see a price rebounding down off that level, even if we get a temporary breach. Okay, this is still okay. Or in the other hand, we could see price and the spike solidly breaching through our technicals. All right, and therefore that means that, well, those levels of support and resistance were not that strong to begin with. Okay, those are the only two possible outcomes we may get here. However, in order to know which of the two possible outcomes we are facing, again, we need to wait for the news momentum to die out. We need to wait for price to come back down to reasonable trading, to a reasonable or a standard trading pace. So please don't rush into your analysis. Do wait those 10-15 minutes up on the news, to pass by before start analyzing the spike. Okay, it really is important, guys. That's why am I stressing this point over and over. And finally, once we are able to read the spike, once we are able to determine the strength of those levels of support and resistance by reading the spike, or rather by reading the impact of the spike on those levels of support and resistance, we are going to be able to take much better or much more solid short-term trading decisions. Okay? Needless to say, we are obviously going to be trading according to the market reaction. If the levels of support and resistance, that particular level of support and resistance was strong enough to reject this spike, you're going to be searching for trades in the direction of the bounce. All right, and in the other hand, if the news spike was able to breach through that level, then you obviously want to be searching for continuation trades. Okay, you want to be taking the first trading signal your system gives you in the direction of the breakout or in the direction of the bounce, depending on what possible outcome we get, on what information we get by reading the spike around those key levels of intra-week support and resistance. Okay. Oh, by the way, you may have probably noticed that I wrote down here short-term trading just as I did up here. Okay, again, I must stress on this concept. News announcement and well, you know, anything that's related to intraday trading has a very short memory span. So if you got the bounce of the of that key level of support and resistance, you need to be searching for your short opportunity within the next few hours. Otherwise, the market as a whole is gonna be forgetting this bounce. All right, the market as a whole is gonna be forgetting this downward bias. All right, and you are gonna be losing your edge. Okay, that extra edge you got by by gathering this information, okay, by gathering or by reading the spike around those key levels of support and resistance. Well, you are gonna lose that edge unless you are able to benefit from it, unless you are able to find your entry within the next few hours. Now, I cannot really pinpoint a specific number of hours, 2, 3, 4. It really depends on every market condition. It depends on how large the deviation was for that particular news announcement. It depends on how sharp the bounce or the breakout is. Like I say, it does depend on a number of factors, but at any rate, it's gonna be just few hours. So, either you can exploit this market rejection rather quickly, or you're gonna lose your chance for good and you need to wait for the next news announcement. And also, that short-term nature applies not only to the time factor but also to the profit target factor. Please don't exploit or don't seek to exploit an 80 pip bounce out of a news spike. All right. Again, this is intraday trading on its purest form. Your targets should be more or less around the 20, 25, 30 pip mark, no more than that. All right, so please don't search for full home runs, okay, or for full breakouts. Just it's not worth it, and chances are you are not gonna get such a massive reaction upon the news momentum, okay, the spike momentum dying out. You are not gonna get more than 20-25 pips out of any potential entry you may find. All right, so again, keep it short term, find your entries real quickly, again within the first hours, and keep your profit taking levels very tight. All right, very conservative. Alright folks, that's all I had for today. That's how you read the spike and how you implement that reading into your technical analysis. Trust me if I say that not many intraday traders know about this technique. What they usually do is to simply avoid the news altogether, and they don't actually analyze the spike and, more importantly, the impact of the news spike onto your technical levels of support and resistance. And again, you can really extract some useful information from that. All right, so next time you read your economical calendar and you see an important news announcement being released in the market, do try to follow the spike and the deviation and see what type of reaction you get around your intra-week levels of support and resistance. You will see how you'll be able to determine rather accurately the strength of those levels of intra-week support and resistance as per the market reaction, okay, or as per whether the spike is able to breach through those levels, or in the other hand, whether the spike respects those levels. Okay? Alright folks, that's all. Bye bye, thanks.